Welcome to MSG Presents. I'm your host with the most, the man with the plan, the Scottie Pippen of podcast pimping. What's the correct amount of life insurance? Now, I'm not going to lie. This was one of my favorite things to help people with when I was selling insurance, to help them understand what their insurable need was. The goal is always to have a policy that allows your loved ones to continue their quality of life, plain and simple. So you're thinking about it in the context of, okay, something happens, I die too soon. I want my family to be able to continue on and be able to live in the manner that they lived in prior to me passing. Also, you want to have enough funds to settle your affairs. There are burial costs. There may be different expenses that still need to be paid. There might be debt that needs to be cleared. All these different things need to be considered. And part of that consideration is you're thinking about your income, you're thinking about your rent or mortgage payment, and you're thinking about your education for any young children or other dependents that you may have. But the main thing I want us to walk away with here is continuing the quality of life for your family members is the number one goal when you have life insurance. Now, I also want you to keep in mind that life insurance companies are taking a risk when they're insuring you. I've had this conversation a lot with insurance clients, and it's hard for some people to understand initially because they have these insurance policies on their job, and it's like you're an employee, so they have to cover you as long as you opt in. This is definitely not that. So we're talking about you getting a private policy, a policy of your own, and the insurance company is taking a risk. And so when you complete the application, and we're going to talk about the process to get insurance in a few, they are just trying to figure out how risky is this person to insure. So if they see things on there that are risky, you have certain medical conditions. Sometimes people might have convictions. They may have medications that they're on that may seem problematic. They're evaluating all of that, and they're going to come back and say either we can insure you or we can't. Or either they're going to say we cannot insure you, or they may say we can, but it's going to cost you a little bit more because of your situation. I want you to make sure that we're clear, though, they don't owe you any coverage. And your situation will be evaluated to see how much of a risk you are. Everybody represents some type of risk because we just don't know what can happen in life. But it's the level of risk is what they're evaluating. Again, this does differ from your employee-based life insurance because you're given coverage just because you are an employee. Now, I love that I was introduced to this because the question comes up, all right, I know I need life insurance, but how much do I need? And I can't tell you how many people out there got coverage, but they didn't have enough. Because I'm going to tell you one of the favorite things that I used to hear people say. It wasn't my favorite, but it was scary. But you'd initially talk to a lot of people, and the first thing they would say is, I have insurance. Oh, I have insurance. Oh, yeah, I have insurance. And you're looking at them and it's, oh, okay. And so my follow-up question would be, how much insurance do you have? And because a lot of this insurance was through employers, not all of it, they really didn't know. Now, say somebody did know. The follow-up question to that is, or was, how much insurance? You say you have $500,000 in life insurance. How much do you need, though? I would say 99% of the people that I've ever spoken to about life insurance did not know. And I'm not saying this in a judgmental way because I didn't know either until I was taught, but they didn't know how much they needed. And trying to talk to them to understand having life insurance isn't enough. You need to make sure you have enough life insurance. So here's a formula. Here's a method. It's called the DIME method, D-I-M-E. You do not have to use this. You might talk to some people who have a different formula. You might talk to some people that feel like they have a better formula. That's fine. But I want you to have this in your arsenal so that you can use it to compare it against any other method that's out there to figure out how much life insurance you need. Debt is the D and dime. You're adding up all your debt. Income, you're multiplying your annual income times 10. And we're going to get to why 10 in a second. Mortgage, multiply your annual mortgage or rent expense times 10. And then education, the funds that are needed for your young children or dependents to go to school. Now, let's get context here. We're talking about this from the context of you or someone with a policy passing away too soon, meaning you're 40, someone passes away at 45. They didn't expect to pass away at that time. You want to make sure you have a financial foundation in place, again, so your family can continue their quality of life. And so the debt is being able to go back and pay off debts that were in the other person's name if you choose to. Income. Say the person was the breadwinner of the family. They're no longer here. Some people believe it's good to have at least, and I'm one of those people, 10 years worth of annual income so that the family has time to recover, stabilize, and continue on. Now, you might say 10 years is too much. You might say it's not enough. That's fine. It's just a baseline number. Mortgage and rent, same thing. You pass away, you don't want your family scrambling around trying to figure out where they're going to live and scramble to gather funds. You're basically saying, hey, you have enough money here to live for 10 years. Again, you might think that's too much or too little. It's a baseline number. And then as far as the education, I would encourage anybody that's has young children or young dependents who you want to send to college in case something happens to you. Do a little bit of research on the cost of education at different schools at the time of this video so that you can get a good number, solid number to determine what the cost may actually be in the future. Kind of look at the trends of how the costs are rising, and then you can factor out, okay, I think I need about $300,000 10 years from now if I were to pass away. And then you come up with a number you feel comfortable with based on thinking in the future, but also considering the present if something were to happen tomorrow. You add all of those up, and that is your insurable need. Let's look at an example. We have Malia here. She's married. She has $100,000 annual income, so really nice income, $250,000 mortgage. She has a 5-year-old child named Chris, who she does want to attend college. And she has about $25,000 in credit card debt. How much life insurance does she need? Now, in this example, we're assuming that there's someone close to Malia that's going to help reconcile her affairs. Could be a parent, it could be a significant other, but how much do they need to handle everything? So debt, $25,000, get clear. Income, $100K per year times 10 is $1 million. Mortgage, $250,000 left on the mortgage, so we put that number in. And then after doing research, we estimated about $300,000 that we feel comfortable with leaving for any education expenses. Add all of that up, $1,575,000. Now, I can tell you, most people are always shocked when they see their dime or their insurable need. They're always shocked. I would say 100% of the people that I've ever worked with were shocked when they saw their insurable need because it's always higher than what they thought, and they typically were underinsured. And so do your dime. You're in the course, so you're going to have that as one of the action items, but you want to do your dime, and then you want to say, hey, all right, if 1.5 million is my dime, how much do I have? And then you need to work on figuring out how to fill the gap. Before we close today's episode, a quick heads up. This show isn't just about talk. It's about movement for those building a legacy. It's about helping people heal from their past and level up in life. Real conversations that matter. If you're vibing with the message, make sure to subscribe, leave a review, and share it with somebody that needs to hear it. Peace.